Okay, so thanks everyone. Thanks to the Reed team for organising another great event and some excellent stories in the room. So another gold company, another gold explorer. I'm going to talk about Great Boulder Resources, West Australian-based growing explorer moving into development phase in the next couple of years. Very exciting story, and on the back of the current gold price and expectations of continued growth in the gold price with that sitting at around $3,700 overnight. Obviously a lot of excitement in the gold space, but as always quality will prevail, and I think that's what we have. So this is, long story short, we're based, the project is our flagship sidewell project. This is one of the answers to your quiz as well. I won't tell you which question. Based in Meekatharra in Western Australia, this is one of WA's most historic goldfields outside of Kalgoorlie, and we've got a really big project there. It's right on the edge of town. It's really a very unusual position, being really effectively a greenfields project in what is otherwise a brownfields gold area. We have a resource dating back to November 2023, which is 2/3 of a million ounces at 2.8 grams per tonne. That's mostly open pittable material. That's a pretty good grade, and Meekatharra is a high grade field, so that's actually not unusual in the area. And there's a gratuitous photo of nuggets in RC chips, and that meter assayed over 3,000 grams per tonne. And at the time, that was also in 2023, that was one of the highest grade drill intersections in the world for about 4 months. And it reflects some of the astonishing grades that we get at this project, and the Mulga Bill deposit in particular. So this is what the company looks like right now, capped at about $70 million. As I said, 2/3 of a million ounces in resource. We're on the cusp of upgrading that resource, and our target is to achieve 1 million ounces this calendar year. So we're working very, very hard to achieve that goal. Last week we had 3 rigs on site, currently 2. The Air Corps rig has gone off to another job, and it will be back in the next week or 2 to continue. So we're very, very busy in the field. We have a small team. We punch well above our weight in terms of exploration success, and we've really over the last few years got a very good handle on the structure and the controls on mineralisation at this project, which hasn't been easy, and there's been a lot of very high level technical work to achieve that. The other key thing here is we're well cashed up at the moment. We did quite a big raise a couple of months ago. We won't need to go back to the market for quite a while, and that does give us a really good runway to hit this project hard and achieve these growth outcomes that we're working towards. Just very briefly on the board, quite a strong technical board here, headed up by Greg Hall, the chairman, and Greg's been around working all around the world for 40 odd years or more. Still working today as a consultant. He's just come back from a trip to China advising on a project over there. Fantastic mentor and head of the company. And then another special mention, Dan Doran, who's here in the audience, is our exploration manager. And he's a very smart fella himself, but he leads a really high-performing team of excellent young geologists. I'm a geologist as well. If you don't know me previously, I've been around for 30-odd years. Fairly strong background in mining and gold production, particularly in Western Australia, some time in the Territory and exploring in New Guinea. And I've been in this role for about 6 years, which has been a fantastic process. During that time, I pivoted the company away from nickel exploration onto a gold focus. That's been extremely successful, and obviously there's always luck involved in the exploration space, and the luck in our case was to acquire this project in Meekatharra, which has proven to be a transformational opportunity and continues to deliver upside almost on a weekly basis in terms of drill results. And this is it. So there's a few key real things to point out on this map, and location is a key attribute of this project, and that is the fact that it's right in Meekatharra. The largest deposit, Mulga Bill, is 10 minutes drive from town, so it's extremely easy in terms of logistical setup to continue exploring there. It's very flat. There's no issues with environmental or any other constraints. and we're surrounded by existing infrastructure, which includes 2 operating gold mills and a third one that's on care and maintenance. So Westgold are our neighbour on the west side. They've got a big mill at Bluebird, 1.8 million tonnes per annum, and they have expressed interest in ore purchase agreements, which they're already doing with one of our other neighbours. So we're certainly in an area where we can access existing milling infrastructure. I think this project will be big enough for us to consider building our own infrastructure if we decide to. We have always said we don't want to duplicate mills and infrastructure if we don't have to, but certainly the project has the scale to do that if we wish. And zooming in slightly, this is a map of the magnetics, and I'll just point out a couple of things here. Firstly, the Bluebird mill is down here. That's 25 kilometres from the centre of our project, so it's very close. Bearing in mind you pay 20 cents per tonne to truck this stuff, it's pretty cheap. Secondly, the Paddy's Flat group of mines, that's about a 3 million ounce endowment. If you follow that geology up around this big fold structure, you come down through the east side of our project, which we call the Eastern Corridor. Now we have a chain of mineralisation and alteration in that same stratigraphy as Paddy's Flat on the east side, spanning at least 22 kilometres, and it continues to grow as we push our exploration south. So that's really an astonishing scale in terms of the size of opportunity and the number of targets that we have just there. And the interesting thing is a lot of those targets have never previously been drilled. And as an example, Ironbark was a virgin discovery. We found that just with soil sampling, so very conventional and simple exploration. In the middle here, the Central Corridor is so far a 6 kilometre zone of intrusive related mineralisation. So we've found through there a gold association with pathfinder elements, particularly bismuth has been one of the very important ones for our exploration. It is undercover, so it's somewhat a technical challenge. And I heard the last presenter refer to Dr. Scott Halley, and Scott has also been a very key contributor in our exploration process by helping us with that geochemical understanding, which has allowed us to effectively target blind mineralisation at considerable depth with quite a lot of success, as cheaply as we could. Just to fast forward quickly to talk about the Ironbark deposit. Now, we did a scoping study on this earlier in the year, which came out in mid-July. Now, there's a couple of reasons there. We wanted to demonstrate that there was optionality for early stage development of this project by pushing Ironbark through the approvals process, getting a mining lease granted, mining agreement with the traditional owner group, and mining approvals in 2026. And so the outcome of this scoping study basically shows that there's a net profit of easily $100 million. The spot price when we put it out was 5,064 Australian dollars, and that demonstrated an NPV of around 137 million. And today the Australian dollar gold price is over 5,500, so it moves on a daily basis. So that was just a production target of 79,000 ounces at a run of mine grade of 2 grams per tonne. So it's a relatively conservative production figure, given that the resource grade there is 3.3. We think we can actually achieve better than that. Low capital, obviously we need to move that from scoping study, which is plus or minus 30% range of uncertainty, through pre-feasibility to feasibility, and that work is going on at the moment. But really the key figure there, that NPV value, is far and away larger than our current market capitalisation, and I know you'll hear that a few times in the next couple of days, but it certainly demonstrates the value gap in the junior gold space, and that's really where I think investors should be looking in the gold space, given that the larger companies, producers and developers are starting to get towards full value, arguably, depending on who you're talking about. In the explorer developer space, there's a lot of value still on the table. Now, getting into the verify bit. So this is the regional map again. Those are the 3 mills. So Andy Well to the north of us there, that's operating with Meeka Metals. Bluebird is the one that has some spare capacity. That's Westgold's mill. That's a very large mill, 1.8 million tonnes per annum. And our Canadian friends to the south at Burnakura, that's a small older mill which is on care and maintenance, and they're currently, currently finalising a scoping study looking at restarting mining and restarting that mill with an option to build a new plant at about 750,000 tonnes per annum. So we have an MOU to consider using that mill if they restart it, and that may become a strategic advantage in the future. Just zooming in now on the Sidewell project. So you can see in the middle there's a couple of deposits there flagged. Mulga Bill on the left, 568,000 ounces, that's the 2023 resource. Ironbark to the east is the 100,000 ounce, that's the subject of the scoping study. And since then we've been drilling here at Eaglehawk. Saltbush was a discovery of ours, Eaglehawk was a discovery too, and then down here at Sidewell South. And those 5 areas are going to go into resource, and that's what we expect, plus the update on Ironbark. We expect that to deliver the million ounce, kind of magical million, I suppose, and ideally by Christmas, and that is really the timeline that we're aiming towards right now. So I'll zoom in on Mulga Bill. You can see the mineralised lodes there. It's a combination of vertical shear hosted or intrusive related lodes. I shouldn't say shear hosted, but they do appear to be conformable with the shearing. And then these very high grade flatter dipping, west dipping veins in bright red. And that is the subject of the 568,000 ounces. If you then look further to the north, it's quickly apparent that we've got quite a bit of drilling here. There's some sort of a gap, and then we've got Eaglehawk to the north, and that is really the focus of the growth in this deposit. So this whole thing is about 2.5 kilometres long. Most of the resource is down to 250 metres. Intrusive related systems do tend to be very deep rooted, so we will be doing some deep drilling later this year under both Mulga Bill and Eaglehawk to test the continuity of these flat dipping high grade vein systems, or west dipping I should say. And this is just another view of Eaglehawk to the north, and you can see that it is relatively under drilled, and there's quite a bit more work to do there to get it to the same confidence level as Mulga Bill. A short distance across to the southeast though, we have Ironbark here. This is the scoping study pit shell. That was done at 4,000 Australian dollars per ounce. And the interesting thing here is that while we were doing this study and subsequent to that, we've found this area to the south where we have this really quite high grade mineralisation that is perhaps plunging in a southerly direction. And we're intersecting that at around between 7 and 9 grams per tonne in the last 3 to 4 months. So if you look back at some of our announcements about that, that promises quite significant resource growth on that 100,000 ounce resource. For example, we've extended what was previously a 600 metre strike. We've extended that by about 180 metres and made it quite a bit bigger, and I'm assuming that it will also increase the average grade. And this is what it looks like really in terms of topography, looking up towards Mulga Bill, towards Andy Well, and then down to Saltbush. This is the eastern corridor stretching off into the distance. That's a 22 kilometre zone of targets. And then if you spin it around looking to the west, you can see Meekatharra in the distance, which is just there. It's right on the edge of town, extremely close. So I'm just about out of time, so I won't dwell on this too much other than to say, if you consider that eastern corridor looking down that chain of targets, 22 kilometres long, this is part of the reason that we have so much confidence not only in achieving 1 million ounces, but our aspirational target of 1.5 million ounces in the next 1 to 2 years, at which point we will get heavily into feasibility studies and proving the economic viability of this project, talking to all our neighbours, considering construction, looking at all the opportunities that come across our desk in that time. This is the chain of catalysts, so keep an eye out for things like mining agreement being signed, mining lease being granted, million ounce resource update, and further exploration success through the rest of this year, coming from between 2 and 3 rigs on the ground. It's a very, very busy timeline. And that's it. So thanks for your attention.